Hello everyone, this is Shichiro Kasai, the licensed real estate agent in Japan. When you look at the Japanese real estate market today, the headline numbers look good, but the reality is different. The rules of the game have changed. Today, the most important question for investors is not where is the demand. The actual question is, who has the resources to build it? There is a big gap between the money flowing in and the actual capacity to build. So let me show you what is going on the ground and where the new risks and opportunities are. So let's get started.
So now I will talk about the structural changes in the Japanese real estate and the construction market. The data we are looking at is from the Ministry of Land, Infrastructure, Transport and Tourism for March 2026. Let's begin. So executive summary. The headline data shows that the total construction market is growing. However, this growth has a deep structural division. We can see three main trends here. First, macro demand is much stronger than the supply. Second, capital is moving away from traditional housing to industrial sectors. Third, there is a severe gap in delivery capacity between regions. Macro strain. This slide shows the gap between demand and execution capacity. In March 2026, the total national completed construction volume reached 5.6 trillion yen. This is a 6.1% increase year on year, but the national backlog volume reached almost 50 trillion yen, an 11.1% increase. Backlogged orders are expanding much faster than completed projects. The domestic market is facing delivery strain. Sector pivot. Next, let's look at where the money is going. We see a clear rotation of capital. Private residential construction is shrinking. Completed volume is minus 0.5% and the backlog is minus 3.0%. On the other hand, funds are moving aggressively into non-residential buildings like logistics and data centers and civil engineering. Non-residential backlog is up to 22.7% and the civil engineering completed volume is up 24.6%. Resource allocation. Why is this happening? In Japan, construction resources like labor and materials are strictly finite. Because of the limitation, resources are allocated to industrial and civil mega projects first. As a result, small-scale housing developments cannot secure enough workers or materials. Regional delivery capacity. While backlogs are growing nationwide, the speed of construction is very different depending on the area. This chart compares the growth of completed volume and backlogged volume. Kanto shows a strong, balanced growth. Kinki shows a severe anomaly. Their completed volume is negative, but their backlog spiked by over 20%. Chugoku shows the highest absolute growth spikes in both metrics. Diagnostic framework. We categorize the regions into 4 types based on their execution risk. Kanto is an efficient engine. They digest capacity smoothly. Kinki and Kyushu are bottlenecks. They have severe supply constraints and a high risk of delay. Chugoku and Tohoku are hypergrowth nodes driven by mega projects. Finally, Hokkaido is seeing capital outflows and market contraction. Deep dive, Kanto versus Kinki. Let's compare the two primary economic hubs. Kanto holds about 40% of the national backlog, which is nearly 20 trillion yen. But they execute smoothly. Completed volume is up 10%, and backlog is up 7.5%. High concentration of resources makes on-time delivery highly probable. In contrast, Kinki is stagnating. Their completed volume is minus 1.7%, but uncompleted orders grew by 20.8%. Projects in Kinki have a high risk of delays and cost overruns. Localized macro catalysts. Growth in other regional areas is driven by specific catalysts. In Kyushu, semiconductor infrastructure is piling up orders, pushing the backlog up by 30.7%. In Hokuriku, reconstruction demand drove a 23.3% increase in completed volume. Chugoku is showing nearly signs of backlog accumulation. Hokkaido is the only region facing double-digit negative growth in completions. The new structural realities. To finish this presentation, the March 2026 data shows three new realities of the Japanese market. Number one, scale dictates survival. Mega projects will continue to absorb finite labor and materials. Number two, geography limits execution. You must differentiate between high-capacity hubs like Kanto and constrained bottlenecks like Kinki. Number three, the persisting backlog environment is a new normal. Smooth project delivery is now the exception, not the rule. Statistical references. This concludes my presentation based on the March 2026 construction statistics data. So thank you for your time and attention. I'm very happy to take any questions you may have. So thank you. See you soon. Bye-bye.